Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Welcome. I hope you are enjoying this New Year period. I've taken a bit of time off, not too much, but spent some time with the family, just hanging out at the beach and enjoying myself. But always in the back of my mind, I'm thinking about what's happening this year when it comes to property. The sort of stuff we're going to be chatting about on the Smart Property Investment Show over the coming period. Obviously, start of the year, everyone's talking about what's going to happen, and we've done a bit of that already. Back into 2018, we obviously spoke a lot about market predictions, and we've done some really good podcasts around that, both with me and my colleagues around what we're seeing and what people are saying, as well as some people who come into the studio to tell us how they see the world. And there's been some interesting commentary around that. There is very different opinions to how Australia's going to be shaping up in our property markets moving forward. So with different opinions, that's cool. It's good to know what other people think, and you can help shape the way that you see the world based on what other people are saying. So the important thing is that you make your own decisions. You use the information you have in front of you to determine how you choose to see the world and where you see opportunities, or whether or not that might change the way you invest this year. You might not do anything. That's okay as well. But as you know, here at Smart Property Investment, we work with some other brands that fall under the Momentum Media Network, including Real Estate Business, which is our platform for Australia's residential sales sector. So real estate agents primarily who are out there selling properties. Now, they're a group of people who at the back end of 2018 certainly had some concerns with softening markets, driven by and large through the Sydney and Melbourne markets. Auction clearance rates down. A lot of auctioneers sort of saying the world is changing quickly, but by and large, every good real estate agent I talk to is still finding opportunities in this marketplace. To help me out today to have a bit of a chat around all this, Tim Neary, who is the editor of Real Estate Business. You might have heard him on the show beforehand. We're going to get a bit of a take from him on what real estate agents are doing right now, how they see the world, and hopefully any lessons for property investors on how they might be able to capitalise on this market, knowing what is making agents tick. Tim, how are you going?
I'm good, Phil. I'm good. How are you going?
I'm good. That was a long-winded introduction.
Very nice introduction there. Nice resume of what's going on now.
A smooth transition to our conversation. So myself and Tim have worked together for, Jesus, how many years? I've known you for a decade, but probably worked together for
hand in glove, 3-4 years now.
3-4 years. You steer the Good Ship Real Estate Business, which is a juggernaut for the residential sales area, also the property manager sector in Australia. You do stuff like the top 100 agents, which is the benchmark for the best agents in Australia.
We've got some great rankings there on Real Estate Business, as you say. The juggernaut, I like the way you describe that.
Juggernaut is a good word.
Certainly are the champions of real estate in across the whole of Australia. Absolutely.
So you run your own podcast called Secrets of the Top 100 Agents, where you actually chat with agents and you try and extract information out of them about how they're going about building their businesses and their concerns in the market.
Correct.
Your top 100 agents, so this is the pool of the best agents in Australia, and it's recognised by industry as the best, right?
Correct,
this ranking. This is just not some whoever's got the best marketing or who's paid the most to a potential ratings agency to do it. It's all based on metrics, right? How good they are at their job. How good they are at the job. Are your top 100 agents sort of sweating at the moment when it comes to the property market, or are they still doing okay?
They're still doing okay, Phil. Things are a little down, not quite to the sort of the heydays of years gone by. But what we're seeing is that the best agents are still the best agents and still doing the business and still getting the results. And not necessarily just put off by the cooling market and the narrative that goes with that cooling market, still doing the business of real estate on a day-to-day basis, listing and selling properties.
Listing and selling properties. You talk about the narrative of a cooling market. We've spoken about this before on the show. There's markets within markets within markets, within suburbs, within states, within areas. So we can't talk specifically about a market because it's different depending where you are. If you think of Melbourne and Sydney, I imagine there's some agents who are probably still doing pretty good, right?
Yeah.
No problems whatsoever?
Yeah, absolutely. And certainly, and it's not just in the prestige areas, because those are still doing it. Those might be dipping off a little bit, but in some of those areas that are less sort of well known, those markets are still doing well as they've ever done. So those agents that are entrenched in those markets and sort of are the leaders in those markets of their catchment areas, they are still performing well.
So some of the dynamics that you might read or listen to on a podcast or see on the TV, if you're tuning into this particular podcast, they talk about cooling markets. They talk about softening markets. They talk about auction clearance rates are down. They talk about listings are down. They talk about time on market is increasing. So these are all different metrics and indicators that real estate agents use to work out how hot a market is, which is another term. What are agents really seeing right now? Is there a lot less sort of listings out there right now? Is there a lot less stock on market?
I think those are the two things, that the listings are a little harder to come by, and that days on market are starting to push out a little bit. And so what that rolls into is a lot more work up front in getting those listings. I think a lot of vendors, we're seeing a lot of vendors sort of sitting on their hands a little bit, not wanting to move on. But those that do go, having a little more of a scrutiny in terms of who they're going to be choosing to represent them in the sale of their properties. So agents have to work a lot harder up front to get the listing. And then when they get the listing, because it's taking longer to sell, those days on market are starting to push out a little bit, have to do more work in terms of just keeping the vendor in the loop and from becoming a little agitated, because, the vendor might be used to selling the property quite quickly. And as the market's cooled, gets a little agitated as the days start to push out.
So they talk about less properties being on the market. So there's less properties for sale. And you look at some of those dynamics. Why is there less properties for sale? Some of it might just be because it's Christmas and people don't like selling property over the Christmas and the New Year period. That might be one factor. Another factor is a lot of people are probably sitting there thinking, I don't want to sell my property right now because it's not worth as much as what it was worth 6-12 months ago, right? And that's probably one of the key drivers for it. So people aren't listing their properties because they feel as though they're not getting the value they expect if they sell it right now. A lot of that is relative. If you've been sitting on a property for 20 years and you sell it today, I tell you what, you're probably going to sell it for a lot more than you purchased it for.
That's correct.
But it's for people who haven't really, who are looking to transact quickly, a buy, sell, flip type scenario where there might be negative equity in those properties. So the agents are struggling, aren't they, getting people to find to sell their properties for? Hence the reason why if you sell in this market, there's no reason why you shouldn't be selling in this market. You need to find the right agent. How do you go about finding those right agents in a market like this if you're looking to sell your investment property?
It's a really good point that you make there, and there's a couple of ways to do it. One of, you've got to look for an agent that's got a good reputation. And in finding an agent with a good reputation, you can either just see and get a feel for what's in your area and see the boards that are up around the area. There's also places online that you can go to that agents are putting themselves up and putting themselves out on offer. But the main thing is just to call all the agents in and let them come in and present to you and do a listings presentation to you as a seller. Get a feel for what the rapport that you build with them, what they can do. Ask them what they can do for you and in selling that in selling your property.
So I know you ask this question quite a lot when you chat with your top 100 agents on your podcast, Secrets of Top 100 Agents. How the whole sort of idea around discounting on fees. So a lot of people think that the best agent is the agent that's got the cheapest fee for you, and therefore, as a property investor, you choose the person who you feel as though you need to give away the least amount of money. Now, your top agents, I imagine, and you've probably got quite a lot of commentary on this, would probably never discount on their fees. They might be more expensive or the most expensive in the market. That's okay, isn't it?
It's absolutely okay. And the thing that comes back to me every time I'm talking to them about this is it's not about the discounting of the fees, not about the cost of the fee. It's about the value that they can get you in the end sale. So it becomes around the cost of value or the amount of the value that you're going to get. So if you are selling with a good agent, you may sell your property for 10% more than what you're going to get it sold if the agent is less adept and has less of a network in that area and brings less buyers through. So definitely they don't want to discount on fees, and they rather sell on the value that they bring.
It's an interesting point. So when you get a listing presentation, you might get 3 or 4 different agents to come and tell you why they should be selling your property.
Put the pitch in.
Now, a mistake a lot of sellers, property investors make is that they will tell an agent they think their property is worth this amount of money, and they often choose the agent that says, yes, Mr. Tarrant, you are right. Your property is worth $400,000. But when someone else comes in, might have a higher commission, go, Mr. Tarrant, mate, your property's not worth 400 in this market. It's worth 360. And typically they don't get chosen because you think, I'm going to get less. They're going to get less, and then pay them more. Yeah. So this is a balance that you take. So a big mistake that people make, where they dictate to the agent what they think the price is, where a good agent should know the market much more effectively than you do.
Exactly right. And so that's probably a really good question to ask, because if you ask the agent, rather than tell the agent what you think it's worth, and it's good to understand what your property is worth, is ask them how they know. Ask them for the evidence, and they'll bring you all of the past sales in the area, and they've got all the stats. The good agents will have all those stats at their fingertips, and they'll have the evidence there, so they can back up what they're saying. And I think it's really, if an agent is saying to you, this is what your property is valued at, and they got, and they know what it is, and they've got the stats to back that up, listen to them.
An agent will probably try and get out of you what you think your property is, and a lot of them will sit there and think, this guy is so far off the ball, I don't even want to sell their property, because a lot of agents will go, that's too much of a headache for me, because agents' reputation, they're only as good as their last sale. So if they pick up a property, and a lot of investors don't understand this, if an agent picks up a property based on a promise to the vendor that I can hit that amount, and then that property languishes on market for a long time and pushes out the sell date, that's not good for the agent's reputation, right?
To your point earlier, is how do you find a good agent? Because the reputation that it's got going around in that catchment area where they are.
Trust your agent.
Both on the ground and also online. And if that happens, that reputation starts to taint a little bit in the in the traps, as it were, around the streets.
So ask that question then, what's been, to the agent you choose to sell your property, what's been your time on market for the last number of properties that you sold? And they go, oh, look, I sell my stuff before it even hits the market. Well, you got a pretty talented agent. Yeah. Or you could ask the other side, they're selling it too cheaply. But if they've got a good standard industry benchmark, time on market, and they've got great collateral with how they and strategy to market the property to get the best price. These are key things, very tangible.
Very much so. And also just in terms of those good agents, it's also about the size of their network, that they can deal with people. They've got a network of buyers, perhaps, of buyers agents that they can work with, that they can get the property into the market before it goes on market, if I can put it that way, or if it goes to the market, that they've got a big network, a big marketing network, they can bring lots of buyers through, so that your property gets the best opportunity to sell for the best price.
And it's really interesting because we're chatting about softening markets and therefore less stock, which is the current sort of climate we're in, which means that with less stock on market, it's a challenge for both buyers and sellers. But we're now moving into a buyer's market, and they're talking Sydney and Melbourne are moving into a buyer's market, where if people have their properties in market, there might be a good reason for them to sell it, and therefore there's probably some good opportunities for discounting, and that's a metric that is used by property investors, Tim, around what is a discounting in particular suburbs, and that gives you an idea of a particular market dynamics. But don't think that all markets are like this. I had a good chat with someone late last year, and a porter from a business called Spurbanite. She's a buyer's agent, and she said Canberra's red hot at the moment.
Okay.
They're saying there's getting 30 people out for open inspections. Like, the Canberra market is what the Sydney market was like 2 years ago, when you couldn't even get your foot in the door to buy a place. So don't get influenced thinking that the whole of Australia is in this particular market dynamic with softening properties. Every market is different. Even some regional locations are performing really well.
They're sort of, all the markets are ring fenced, aren't they? So to have, as we were talking about earlier, with this dialogue, this narrative that says Australia softening is not the case. It's the markets within markets, and different markets have their own dynamics.
So with these sort of changing markets across Australia, and Perth is different to Tasmania, and we've spoken about Tasmania recently, that's had a real boon in capital growth, and it's getting some good yields right now. Whether that's all over and done and dusted, maybe it is not for me to comment. But how is real estate, the business of real estate, which is what you concentrate on, how is that evolved and changed that you've seen over 2018, and what are you sort of predicting out to 2019?
I think there's a couple of trends that are starting to show themselves. Probably the three main ones are, and I'll talk about the prop tech first. There's a lot of
prop tech,
a lot of influence of technology that's coming in, fancy things that are coming in. Essentially, where that shows itself is on the sales and marketing side of it. Things like augmented reality and virtual reality. People not necessarily needing to be in the property to view the property, to understand the property physically. They could get all that information online with sort of virtual tools.
So that empowers the buyer, because it means that you cover more ground, because you can get the experience of the property without potentially having to go out there and visit 20 properties in a day. You can shortlist yourself down to maybe 3, which are really right, by using technology to get a better inside view of that property beforehand.
Exactly right. Yeah. It gives the buyers bigger reach, it gives the sellers bigger reach, and it gives the real estate agent bigger reach. Okay. So there's a lot of that, and agents are tapping into this more and more and more to extend their reach and to extend their ability to spread themselves a little thicker around the catchment areas.
Okay,
that's the first one. The second one is probably that there's a bit of a change in dynamic around the networks. There's less agents relying on the bigger name networks, and there's more of a move to sort of the boutique networks as I think that dynamic's starting to change around the franchise model and what that looks like. There's also quite a strong, interestingly, we ran a poll on REB a couple of weeks ago where we were asking that very question, and a much bigger percentage of the people that I thought would say so we're saying that independent is the best way to go. So there seems to be a trend. We'd like to watch it a little bit more closely during the course of 2019 as we go forward and see how that's going to roll out. And then obviously the other one is what I'm calling the DIY model, the purple bricks model that's coming and making a lot of noise in the Australian market at the moment.
So people looking to sell their properties themselves.
And that's really buyer driven, consumer driven rather than the estate agent driven.
It's an interesting thing, and I recommend you go out and look at this, because to our point beforehand around how a good agent can really amplify the value of your property at the point of sale. If an agent can get an extra 5 or 10% purely because they're a professional and that's what they do for a living, I say that's a huge asset. Rather than, I wouldn't want to sell a property myself because I'm not skilled or expert in the marketing of property. I'm not skilled or expert in terms of positioning that property within the current marketplace to ensure I'm pitching it at the right price. These DIY models, they still concern me a little bit personally. And I think there's a lot of people within the real estate sector, the business real estate sector, who share those sentiments about potentially vendors not maximizing their sales price because they're trying to use technology or a DIY method, which might hamper their ability to get a sales price. What's your view of all that?
Look, I mean, at the end of the day, REB is sort of brand agnostic, so we don't take a position either way in terms of right and wrong. But what we're starting to see is that there's a lot more interest from buyers around the DIY model because it's based on that cost, and so they're not seeing that extra leg of the value that they're going to get if they employ a professional real estate agent. Okay. So those real estate agents that are positioning themselves and doing the work to set themselves up as a professional real estate agent to bring something that model can't bring, they're starting to rise above that. But that's incumbent then on those real estate agents to understand what that looks like in the marketplace and how to sell that to a vendor. And what that is, it's all about their ability to negotiate better sales. And so that's not just around using that language, that's around being able to do that, to have the skills and the negotiating, the wherewithal to do that, to bring in the right kind of buyers, to understand what buyers are going to be attracted to this property, how to present this property in the best way for those buyers. So there's a lot of moving parts that go to setting up that A grade real estate agent, which is going to elevate above the DIY model.
So we touched on this really briefly. For our listeners that aren't really familiar with this, I'll try and break it down, and Tim will help me out with how essentially the real estate sales works. You have franchise-based agents. So franchises being the big names that most Australians will be familiar with in real estate.
You'd see them on the boards.
Hooker,
Ray
White,
Harcourts,
all these big brands. Some of them are third and fourth generation.
Rain and Horn has been around for 120 years.
Yeah, so some great Australian businesses, great family businesses. In many of these, they've retained their family ownership. Like LJ Hooker's still got a hooker at the helm, right? So these are large networks, and what they do, they have offices underneath those networks run by principals, and these businesses, Rain and Horn, Blacktown is probably owned by someone, and it's a franchise arrangement. So they get the benefits of transacting and operating as a business under that established network. Then you also have independents. Now, independents mean you can create a real estate agent tomorrow called
Phil and Tim's
Real Estate, and we do everything ourselves, and we don't operate under a brand. We are just a office in a suburb somewhere. And then sort of in between that, you sort of have your boutique networks, and these might be independent or they might be franchise. So these are smaller, more specialized agencies that might concentrate on a particular geographic area or a particular price point of properties. And they're emerging, and as more and more people look to capitalize on the value out of real estate agents, they're turning to these boutique networks for a different sort of type of servicing experience. That's a fair decision, fair call.
Very much so. And so there probably looks like zero assistance on the independent, a lot of assistance at the top end with the Bray Whites and the LJ Hookers, and then just sort of light touch with the boutiques in the middle. Yeah.
And then as an extension of that, you have this emergence of DIY type platforms, which essentially give you the facility as a vendor to sell the property yourself
on your own,
rather than leveraging the skills and capabilities of a professional agent. That's sort of like the four things: independence, non-franchise based, sort of boutique, and DIY. And DIY. So that hopefully that gives you, if you're not that familiar with how it all works. Now, what does it mean for you as a property investor? If we're talking about the sale of an investment property, so myself personally, I've sort of buy and hold. I've never sold a property, but for a lot of people, depending where they are in the life cycle of their portfolio, they might be at the sell side. So like selling your own home, you want to make sure that for your investment property, you get the absolute biggest price possible at the point in time that you're selling it. Now, a lot of people sort of sit there and lament about the fact of, I wish I sold 2 years ago, I would have got paid a lot more money. But when you sell a property, what you sell that property for in that current market is the value of that property. It's all about timing.
That's what it is.
Yeah. You get to choose the timing when you sell a property. So if you're looking to start selling down your portfolio, you need to look at these dynamics of the market and whether or not you can hold for a little bit longer and be one of those people, which means that there's less property markets who are holding on to property, waiting for maybe a turn in the market and get that value increase. But if you need to sell your property right now, and as part of your strategy to those points we spoke about in choosing the agent, don't choose the cheapest agent possible. Is the message, right?
I think that's the message.
Okay,
absolutely.
And then on the buy side, as a property investor buying properties, this particular market offers a lot of opportunities for people. You know, it's moving into a buyer's market. That would be the sentiment from the people that you speak with on your podcast. It is moving into a buyer's market, Sydney, Melbourne.
Very much so. And those agents that are talking about that will also talk about, you know, those buyers become sellers, and so that it's all intertwined. But certainly moving into buyers markets, and those markets lag, don't they? I mean, there's Sydney and Melbourne's cooling off a little bit in some areas now, so that means that, you know, we were talking about Tassie a little earlier, or Perth, certainly in Queensland, those markets are starting to lag behind, starting to flourish behind.
Sydney and Melbourne obviously capture the majority of attention because they're our biggest markets, and they're the markets in a state of flux right now. And I've heard it bandied around the real estate game from some different commentators, including yourself, saying that looking at the current market and being an agent, when the tide goes out, you see who's swimming naked, right? And the sentiment behind that is that anyone could have been a good agent in Sydney or Melbourne over the last 3 years. You didn't need to do anything really special to be able to sell a property. There was more people wanted to buy properties than what there was properties for sale. So you didn't need to go above and beyond. You didn't need to give too much sizzle. Adequate service, you would have shifted a property probably above the value that you was. That's completely changed now. Do you think, predicting out to 2019, where we are right now, is there going to be less agents in the market come the end of this year?
I think there probably will be less agents in the market. It's I think it was a Warren Buffett thing, wasn't it? He said, now you'll know who's swimming without their trunks on. I think that we've seen a few agents without trunks on, and they're gonna find themselves out of the water, and they're gonna find something else. Interestingly, those top agents that we speak to, they talk about this is how real estate really looks. Before, in the last, I don't know what it was, depending on which markets you were in, but certainly 2 or 3 or 4 or 5 years, it was just if you were good enough to position yourself between a buyer and a seller, or between a seller and a buyer, you could pick up the deal. But these days, it's about the business of real estate. So it's a lot of those agents are saying, this is not a hard market. This is real estate right now.
This is the market. Yeah. And this has been a commentary coming out of the experts I speak to, where, you know, because everyone's talking about this market in flux in our major 2 capital cities, Sydney and Melbourne, all the noise and the negativity around it, by and large, every single person I speak to saying, this is just the market, this is real estate. Markets go up, markets go down. They go up, they go down.
Yeah.
It's cyclical.
Yeah.
It's how you have that relationship with those markets is going to determine your success and skills as an investor, a negotiator of property, a seller of property. So yeah, really enjoyed the chat. Any other big sort of bold predictions for 2019, Tim?
I think that what we're going to see more and more of is a big change in the business areas. We've got the election coming up next year.
We do.
So that's going to be quite pivotal. I think a lot of pundits are saying that we're in for a bit of a change of government. So we'll see how that pans out. You can never take anything for granted. We've seen with the US elections just recently that polls are not necessarily indicative of what's going to happen.
Don't always believe the polls.
Don't believe the polls. But that's going to be a game. That's going to be a game shifter. I think how the election goes. There's some talk around that. Prop tech is going to play a bigger and more important role. I think we've got some agents that are still sitting in the fence around that. I think the go there, Phil, is that people still want to see the color of each other's eyes,
which is okay.
Yeah, which is always going to be there. But yes, there's that. But then there's the technology that's going with it. That's going to augment that sale process.
It's an interesting point because I think back to maybe it's a story I've told on this podcast beforehand. I spent some time last year, I think it was, sort of November last year in Silicon Valley doing around sort of tech and all this sort of stuff. And we had one of the sort of chief evangelist people from Salesforce, right?
Yeah.
Come and have a chat with us. And, I was sitting there thinking, Salesforce, they want to control the world and get robots or technology to do absolutely everything. And what this gentleman said, I can't remember his name off the top of my head, but he went, if you're in the business of advice, giving advice, he said, do not fear. Your role into the future is going to just become more and more relevant because a lot of the stuff you used to do, technology is going to assist and augment that ability to do. So you use the term augmenting.
Yeah.
Technology will be augmenting the professional moving forward. He said, people want to eyeball people, particularly when it comes down to major investments. If it's buying a pair of shoes on eBay, you know what? Who really gives a shit?
Yeah.
You might get the wrong size, right?
Doesn't matter.
But if and particularly for millennials and the new generation coming through, if you're dropping $200, $300, $400, $500, $600, $1 million on an asset purchase and you need a mortgage for it and you need someone to help you ensure that you are buying the right asset, the role of the advisor is going to become more and more prevalent moving forward. And I think for the industry that you work with in, Tim, real estate, I imagine a lot of real estate agents would be saying the same thing. You cannot replace years of knowledge, skills, capabilities, sentiment, market knowledge, all this sort of stuff with a machine. It can help. And it can help maybe get some shortcuts, but it's still going to come down to human.
And it's going to be those A grade. It's going to be those A grade, top of the range real estate agents that are going to understand that the best. And they're the ones that are going to be leading and are leading and will continue to lead the industry and be the champions of the industry and continue to drive it and take the new direction of where it's going to go. It's going to change. It's going to look different to what it did 10 years ago. It already does. And in 10 years' time, it's going to be different again. But I think it was Leslie Hooker originally that said, it was certainly credited with it, the business of real estate, the business of selling houses is a people business. It's not a property business.
Yeah.
And I think that will continue to be the driver of the business.
I completely agree.
But it's going to change.
It's going to change. Things always change, right? We're moving into the fourth industrial revolution. I think we're firmly now in that, where technology turns into empowerment. If you look back at every other industrial revolutions, everyone said, everyone's going to lose their jobs, right? But if you look back, and every time there has been some sort of transition, major significant transition into how people work or how things are delivered, more jobs are created. So there's going to be different jobs moving forward.
Exactly. That's exactly it. It's not losing jobs, it's changing jobs. It's just changing. It's changing jobs and changing the way that we do our work.
Yeah.
The way we interact with our jobs.
And that expands out into property investors. Look to leverage the tech available to you right now to help you do what you do better as an investor. I looked at it all the time. Some really cool things. Maybe it's a podcast for another time. There's some really cool stuff coming down line around sort of asset management, portfolio management as a property investor that I've seen, which I find really, really impressive. And maybe we can have a chat about that during the course of the year. But, look for those opportunities. Look to empower yourself as an investor to have greater knowledge, a more sophisticated knowledge, a more holistic knowledge base so you can make more informed property decisions by leveraging tech. And maybe we can do a top 5 things that we use as property investors moving forward. At point in time, maybe a good podcast. Anyway, Tim, that's been really good, mate. Enjoyed the chat.
Nice one, Phil.
Welcome to 2019. I hope it's going to be a good one for you, mate. We'll get you on, and if you want to hear more of Tim on on the podcast, let us know. Contact the team, editor at smartpropertyinvestment.com.au. Have you got any questions around real estate and how real estate agents work or tick or do whatever? I'm sure Tim will be happy to share some of his knowledge.
Absolutely, Phil. Yeah.
Brilliant. Nice one. Thanks, mate. Really enjoyed the chat.
You are welcome.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our morning newsletter, so you're the first in Australia to know what's going on in property and property investment, it's smartpropertyinvestment.com.au/subscribe, or check us out on social media. Just find Smart Property HQ. And again, it's a great way to keep connected. If you like what we're doing here and you want to hear more podcasts, just remember to click the subscribe button wherever you're listening to this right now, whether it's on an Apple thing or a Podbean. There's always a subscribe button and it'll get fed straight into your feed. Anyway, we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.